Financial compliance is an engineering problem. It requires total data visibility at every step of the transaction. The vast majority of sending and receiving banks across the globe do not maintain direct, integrated relationships with one another. To bridge these disconnected institutions, the system relies on intermediate routing banks to act as nodes in a chain. These routing banks typically process bulk settlements between other financial institutions rather than individual customer accounts. This creates a paradox. If a routing bank only sees a bulk settlement between Bank A and Bank B, it lacks the data required to perform compliance checks on the humans actually sending the money. This data gap forced the global financial system to alter its core messaging architecture. In correspondent banking, banks hold funds for each other across borders using Vostro and Nostro accounts. This map traces a 4-node routing chain. A transaction starts at a sending bank, passes through 2 correspondent banks, and arrives at a final beneficiary bank. The simplest way to move money through this chain is the serial method. In this model, an MT103 message moves sequentially from Bank A through the middle nodes to Bank D. This single MT103 message carries both the settlement instructions and the underlying customer data in a single packet. It explicitly contains the data for the ordering customer and the ultimate beneficiary. Because the human data travels inside the settlement message, every intermediate bank in the chain can see the details needed for AML checks. While secure for compliance, processing every single transaction sequentially across different currency zones is slow. It is highly inefficient for global commerce. To speed up transfers, banks developed the cover method, which decouples the message from the settlement. In the announce path, an MT103 message is sent directly from the sending bank to the beneficiary bank. This MT103 carries the customer data, but it doesn't move the funds. To actually move the money, a separate message, the MT202, is routed sequentially through the corresponding banks on the lower track. Prior to 2009, the standard MT202 message functioned as a lightweight settlement instruction. If we examine the internal fields of a pre-2009 MT202 at a routing bank, we find only the identifiers for the sending and receiving banks. The message contained 0 data regarding the underlying originator or the ultimate beneficiary. Intermediate routing banks were moving millions of dollars in settlements without a technical path to perform required opaque screens. As global regulations tightened, institutions realized they were unwittingly processing illicit transactions through these data gaps. The cover method's efficiency had created a severe legal liability, forcing a redesign of the settlement protocol. Swift patched this vulnerability with a new message format, the MT202 COF. This message was designed to bridge the data gap. An indicator in the user block alerts routing systems to its purpose. Tag 119, COV, triggers enhanced compliance processing. The core innovation is splitting the payload into 2 sequences. Sequence A is the general information block. This sequence mirrors the original MT202, containing only the bank-to-bank settlement instructions. Tag 53 and 54 are used to route the funds between the correspondent banks in the chain. Sequence B is the underlying customer detail block, the regulatory payload. This sequence mirrors the customer data from the MT103 announce message. By injecting tag 50 for the ordering customer and tag 59 for the beneficiary, the message satisfies modern tracing requirements. Sequence B hard-coded AML visibility directly into the settlement protocol. This change transformed the routing chain. When intermediate banks parse the COV flag, they extract Sequence B to run real-time sanction screens. If a match is found, the routing bank has the specific data required to file a suspicious activity report. The structural data gaps of the pre-2009 cover method were replaced by a protocol designed for end-to-end transparency. Modern financial regulations are only as effective as the data engineering used to enforce them. Global financial stability relies entirely on the mandatory, block-by-block data parsing logic embedded deep within the world's payment infrastructure.